Hi everyone, welcome to the channel. Today I'm recording from a hotel room, so hopefully that explains my background. But we're going to be focusing on the company Rowe Price, ticker TROW, the global investment management firm with assets under management of more than $1.3 trillion. And many of you may have an IRA or a brokerage account with them. So I did invest in this company and it has not performed that well for me. So I'm debating on whether to cut my losses or hold on and hopefully wait for a recovery. In this video, we'll look at T. Rowe's financials, perform a stock valuation, and at the end of the video, we'll go into computer modeling to forecast the 52-week stock movement. But since I did invest in this company, we'll look at my purchases first. So let's jump right into it. Here are my original purchases into T. Rowe Price back in April of 2022. And we see I bought in around $137. Right now, the stock's trading around $111, $112. So I'm at a loss of minus 18.5% on those original purchases. But then I bought in again back in 2023. And they are slightly up, but not significant. You can see up just a couple of percentage points at best. But over here in column F, if I would have bought into the S&P 500 on those days, you can see I'd be up quite a bit, around 20% or so. But taking into account dividends, overall, I'm down on T. Rowe Price about minus 2.25%. Well, if I bought into the S&P 500 with dividends, I would be up almost 21%. So I'm kind of trailing the S&P 500 by almost minus 25% with this purchase. And you can see here my cost basis is $120. Now down below, you can actually see the my account for T. Rowe Price. So original investment is probably around $1,200. And right now, overall, without dividends, I'm down 7.32% and bringing the current balance to 10,600. So though I'm down, I'm not down significantly, but when I compare it against the S&P 500, which I could have bought into it, yeah, I'm down probably a lot more than what I would like to be, in that low 20% range. So let's move on and we'll look at their financials. Here's T. Rowe's financials, and first I'll point out that the far right bar in each of the charts represents the trailing 12 months, so the first 3 quarters of 2023 and Q4 of 2022. Also, in a few weeks, they will be releasing their full year 2023 results. Now, looking in the top left chart for revenue, we can see the company has experienced steady growth over the years, with a notable peak in 2021. However, there was a 15% decline in 2022, and over the trailing 12 months, revenue has continued to decline. However, I am thinking that as the market's recovering, recently hitting all-time highs, and if consumers continue to put money into the market, this should help their Q4 results and possibly having a higher revenue in fiscal 2023. So we'll see what these results look like in a couple weeks. Then for net income and earnings per share, having very similar trends, each with substantial percentage gains of more than 150% from 2014 to 2021. This would help reflect a profitable company during those time periods. However, 2022 had a sizable drop for each of these data points, declining nearly 50%. Then, following the 2022 results, is when I initially purchased into the company, believing that down year in 2022 was just one underperforming year. But we can see trailing 12 months has not returned to those 2018, 2020 levels. Then book value per share being a little more on a positive sign, although 2022 and trailing 12 months are down from 2021, it's not nearly as apparent as those other data points we just looked at. Next, we have dividends and shares, and this was another reason why I purchased into the company. I like seeing companies that are paying dividends, increasing that over time, and buying back shares. Clearly, they've been doing this for each of these during the past 10 years. So I view this as a positive sign for a company, and I do expect T. Rowe to continue this trend moving forward. Free cash flow and free cash flow per share having similar fluctuations, but always remain positive. Although 2016 and 2017 were pretty low compared to the other years, but still positive. Though a big concern is the cash generating from 2021 and trailing 12 months. We can see it's on a decline, falling 70%. Then revenue per share following the same trend as many of these other data points, with 2022 and trailing 12 months having this pullback. Now, up until 2021, TRO was doing very well in the market. At that time, the market was still at the end of that bull run. But over the last 2 years, as the market pulled back, we can see it significantly impacted their financials here. So hopefully, as the market continues to recover moving forward, their financials can start improving. But let's move on and we'll perform a stock valuation. Here's the valuation for Rowe Price. I have an intrinsic value of just under $100, and with an 85% margin of safety, brings it down to just under $85. While the stock is currently trading around $111 to $112. And my valuation uses a 5% short-term growth rate for the next 10 years with a 10% discount rate, along with a 3% long-term growth rate. And we can see in the upper right that the net income CAGR for the past 10 years was just over 3%. And for earnings per share, it was just under 5%. And this does account for the recent down years we observed when looking at the financials. Now, I'm using the higher end of 5% for my short-term growth rate, believing that T. Rowe Price must be having more inflows for investing as the market continues to recover, which increases their assets under management and thereby helps them to improve their management fees. And regarding my position, I'm currently holding at this point, thinking the market can value the company above my cost basis of $120. And when it does recover to this price point, I'm most likely going to sell out and move on, as I don't believe TRO will be able to duplicate those high growth rates that we saw in their financials that they had leading into 2021. Also, as I mentioned, in another week or so, they will be releasing their Q4 and full year 2023 results. So this and their guidance will influence the direction of the stock price. And I'm staying rather optimistic that at the very least, their 2024 guidance will indicate a positive outlook and help push that price, the stock price, into that low $120 range so I can sell. But before moving on, let's look at a few other data points. And first one I just want to point out is the return on invested capital, which is an important metrics for an investor to always look at. And I like looking for companies that average 10% or higher. And we can see here during the time periods listed that T. Rowe Price has achieved this. Although the past year is down from prior time periods, but still, it is over that 10% mark I like seeing. However, looking at the free cash flow per share, we can see this has been disappointing as it's been showing a declining trend, which we also observed when we looked at their financials a few minutes ago. And this decline in free cash flow is one of the main reasons why I'm looking to liquidate my position. But I'm going to scroll down a little bit and look at a few other data points. We could see for the PE ratio is just under 16, so it is in that value opportunity range, but I would not consider buying more shares unless the stock drops below $90 at the very least. Then long-term debt to free cash flow. See, they don't hold long-term debt, so that's a good sign. Dividends, as we notice on their financials, they have been increasing, and they've actually increased 176% over the past 10 years. So another good sign there. And then their shares, same thing. We saw that on their financials. They've been decreasing over the past 10 years and down 16% overall. And those two data points are two of them I always look for: dividends and shares, just to see what direction they're moving in. And for T. Rowe Price, they're actually moving in the right direction. Then net profit margin, I like seeing this over 10%, and they are well over this for both the 10-year average, which is 32%, and for the past 3 years, which is almost 30%. Now, I will say for the past 10 years, it is actually for the past 3 years, it is a little skewed, as 2021 was rather high in the 40% range, while 2022 in the trailing 12 months is in the 20% range. So that 2021 year is helping to move that up for the 3 year. But let's move on and we'll forecast the stock movement for the next 52 weeks using computer modeling. Here in the computer modeling software, I already ran the analysis using two methods. First, the M5 rule shown here, and the other random forest. Now, I already copied all the results and pasted them into Excel as it's a little easier to see there. But let's take a quick look at what we have first here. And we can see the data is as of Monday, January 29th. And the far right hand column represents the weekly average for Rowe Price's stock price. And the column right next to it is the S&P 500 ETF stock price. And the other columns are just various other data points used for the analysis. And we can see as of January 29th, the stock was just below $112. And we're going to scroll down real quick and just take a quick look at what the 52-week forecast is. And we can see at the end of January 2025, it's actually showing a nice gain, closing at just over $129 at 129.44 cents. But let's jump over to Random Forest and we'll take a quick look there before going on to Excel. For Random Forest, same thing. Data is as of January 29th, and the stock price just below that $112 mark. And scrolling down the 52 weeks, we can see same thing out here in late January 2025. It's actually showing a decline in the stock price, falling to just over $100. Well, let's move over to Excel, and we'll look at all this a little closer. Back in Excel, I already pasted the data from the computer modeling software. And first thing I'll point out is the vertical red line represents this previous Monday, January 29th. And everything to the left of that vertical red line is the historical stock price for Rowe Price. And everything to the right is the computer modeling prediction. So let's look at a little history of the stock price movement. And we can see back in 2009, it was trading around $28 and had a nice run going into 2020, getting up to about $130. Then it did have a decline due to the pandemic, but followed by a strong recovery, hitting about $220 in Q3 of 2021. But then it did have another pullback and even dropping just below $90, followed by a slight recovery to where we are today in the $111, $112 price range. But now let's jump over to another tab and we'll look at the computer modeling predictions a little closer. We can see for the M5 rule, it's predicting an uptick in the stock price, reaching the high $120 range, but only to pull back and fall to about $90, followed by another recovery, getting as high as $160, but only to pull back again and closing out the 52 weeks at around $129, which would be a gain of almost 16%. For Random Forest, it's actually showing the stock to decline and falling below $100, but then slowly recovering for the rest of the year and almost hitting $110 in December, followed by a pullback in January 2025 and closing out the 52 weeks at around $100 for a loss of negative 10% from today's stock price. Now, taking the average of the M5 rule in Random Forest, it's showing a recovery trend similar to the M5 rule, just not as drastic, with a low around $100 and a high around $135 over the prediction. However, closing out the 52 weeks at around $115 for a slight gain of nearly 3%. To recap, I believe a fair value to buy into T. Rowe Price is between $85 and $100, with the lower end taking into account a margin of safety, while the current stock price is trading around $112. Now, I do have concerns with their free cash flow being on a significant decline for the past 24 months, and something I'm going to be watching for closely when they release their upcoming earnings. Now, while I do own the stock, I am down. However, when taking into account dividends, I'm almost breaking even, but still trailing the S&P 500 around 23% if I bought into an ETF instead. For the computer modeling, the M5 rule does have a positive outlook for the stock, showing a 16% gain over the next 52 weeks, while Random Forest shows a gain later in the year, however, only to drop off in January 2025 and being slightly lower from where we are today at around a minus 2.5% loss. So I hope you enjoyed this video and got some useful information. If so, consider subscribing, and I'll see you next time. Thanks for watching.